Life's full of choices, but deciding to learn about options can be easy. June is Options Education Month at TD Direct Investing. Hear from special guests and ask your questions. Register now.
As you just saw, it's Options Education Month at TD Direct Investing. And last week, Senior Client Education Instructor Bryan Rogers walked us through the basics of a call option and how you might be able to profit from a rising stock without owning the shares. This week, we're digging into another strategy, how to protect profits. He spoke earlier with my colleague, Greg Bunnell.
We're expanding on what options can do beyond just profit potential. So options can help you in many market conditions. It could be up, down, sideways. But in the situation where, and then you can also generate income as well. But in a situation where you're looking to protect a profit on an existing stock, we have an option strategy known as a put. So the put option. And in that case, I want to focus on that, but I want to focus on ideally on how to protect a profit. You can do it to, maybe possibly profit from a downward market, but I want to look at protecting, an existing stock.
Okay, so let's talk about it. Let's put that to work. We know what a put option is. You give us a nice example. How does someone put that to work?
Yeah, so to get into the mechanics, we mentioned last week, we talked about a call option where it's like that coupon, we're locking in the price. This is very similar, but you're locking in a price to sell a stock. So if you're thinking, well, I own XYZ stock and I think it's possibly going to drop, I'm a little bit worried. And remember, there's a set time frame. There's always a time frame you have to choose. There's going to be an expiry. But if you're saying, well, if the stock's at $100 and I think it potentially could drop, if I bought it a while ago at a pretty decent price, maybe $50, and I've got a fairly okay profit, I might want to lock that in, and I could say, well, I don't really necessarily want to sell the stock, but if I buy a put option at 90, then it starts to drop. I have that right now. I have the right to sell it to someone else, and they have the obligation to take it from me. So think of, remember I said call up and then put down. You're usually bearish or you're worried about the market going down. So on that stock that you own, you're going to kind of lock in the right to sell it at a potentially higher price if the market does drop.
Anyone who's ever had to take a test on this, probably that was my rhyming scheme. Call up, put down.
Yeah.
That's how I remembered it for that exam. All right, let's put some real world numbers to show us how this could work.
Okay. Yeah, so if we jump into web broker, I've got just a random stock. I pulled up Apple. And remember, this could apply to any stock. If you own this particular stock, Apple's trading right now at $207. It's down $1.05. On the right-hand side, we're looking on the left was calls last week. And this week we're looking at put options on the right-hand side. You're going to see a number, like a ton of numbers here. This is the option chain. So as I scroll down, remember if I scroll up here, the price was around 207. So you're going to notice a line down here this is representing the current stock price. So with options, you're looking at the prices that are a little bit below the current price, because technically you could do it right at the current market, but you're normally going to say, hey, if the stock drops a little bit, let's say if it dropped down to 200, it's not going to cost me a lot right now. This is like a very short term. It only cost me about 40 cents. That would only cover me up until Friday. So that's a short time frame. So let me actually change the time limit. If we wanted to protect ourselves for 30 days, if I click on this June 20th, and then now you can see that's around 31 days. If I scroll down again, you can see there's going to be a different pricing. And this is a key thing to learn about options too, is now it's a lot different. It's $3.55. So in a nutshell, that's going to cost me about $355 to lock in that $200 price. If Apple does drop, let's say down to 150, then now I can force you, Greg, as an example, force you to buy those shares at 200 when it's obviously gone down a lot further. So that's why you're protecting that profit. And remember, the risk is there is a risk on this as well. It's kind of like insurance in a way. You're going to pay that premium. And if you don't end up using it, if it never drops and you keep your shares, you're going to lose that full premium that you paid.
Good to know the other side of that as well. Viewers are probably now very curious after hearing about calls, about hearing from puts this week, but where they can go to learn more.
Yeah, so this is only the tip of the iceberg. So the learning calls and puts is a great start. And that's a lot of times the place where people do start with buying a call, buying a put. But there's all kinds of other interesting strategies, like covered calls and income and things like that. So I just wanted to...
condors.
Yes.
It gets
Oh, yeah, some creative names, Greg. Butterflies and things like that. But if you want to learn more about that stuff, if I share on the screen right now, this is OEM 2025. So it's an entire month that TD Direct Investing dedicates to all of our instructors and our entire video team and everything, put everything we have pretty much for the year into just options. And you can see here on the screen, this is www.td.com/OEM. So it's a nice short website that you can remember. You can go to featured content here as well. This is a number of industry experts and influencers that are available to talk about options. We have some of our famous in-house TD people here as well.
Jason and Heron, yeah.
Jason and Heron. And then we have this live shows. This is showing other webinars that are available. And this workshops tab, this one's really great because you can notice here that we have it available for understanding options fundamentals. So there are a number of classes that myself will be teaching, and Jason and Heron and other colleagues. And they're very interactive. They're nice because they're personal. You can ask questions in them, and it's like a virtual classroom. So there's a ton of those, and if you're just a beginner, you can start with the fundamentals, or if you're somebody that knows a little bit about options, you can get into some of those strategies, like those crazy names we talked about. And other than that, on-demand videos, if you're really getting started out, there's some great videos that you can watch, and you can pause and rewind and watch them as many times as you can if you're having troubles with the concepts.
And just a reminder, we want to emphasize that while the goal of today's segment is to educate you on options, you need to decide for yourself whether trading options is right for you in terms of risk profile, amount of time, and resources you have, just to name a few considerations. Any information we provide does not constitute financial, legal, tax, or investment advice.